Hello and welcome. You are tuned into Your Trades with me, Ankur Mishra and Kavita Thapalyal. In next half an hour, we'll bring you all the news that matters to you around the market. But let's do a quick market check first. Kavita, we did hit a high of 25,153 as far as Nifty is concerned. But as soon as the GST news broke, after that we did come off highs and ended below 25,100 mark as far as Nifty is concerned. But broadly, still in green?
Broadly still in green, but then if you look at the market breadth, it was a quite competitive tussle. You know, the advances are almost close to 1398, and so it's the same ratio. It's 1:1. The 1398 advances and 1398 declines. So we can say that initially in the trade, the markets were really trading high, and the move was driven by reality in oil and gas. You know, we extended the 5 days optimism as well. Although we are ending the day on a higher note as compared to the previous sessions, but as compared to that, the closing throughout the day's trajectory is still on a flattish end. But then you have to look at the broader markets, which have really closed in the red today. Mid cap was earlier in the trade was doing better, but then now it has closed almost in red, 1% down, and the same thing is with the small cap. It closed flat, but on the red side. Talking about sectors, oil and gas was really doing well, but then as far as the closing is concerned, it ended the day with marginal gains, I would say. Auto was pretty flat. FMCG, finance services, if you talk about PSU Bank, again it went in the red and it shut the market today. Largely in trade, the counters that were really active and ended with good gains. Cipla, you can see up 3%, Dr. Reddy's 2.5%, ICICI Bank, Bajaj Finserv, SBI Life, Hindalco. These are the counters that were really doing well and ended high on the green side. Pressure was completely on Coal India, Tata Consumers, Bajaj Auto, Power Grid, Eternal, and Geofinance, 1.5%, 1 to 1.5% down. So, Ankur, this was the market. We did end on the green side, on the good note, a positive note, but then it's a very flat ending, we could say, as compared to the entire day's trade.
Definitely a flat ending, but two specific stocks were in focus, BSE and Angel One, after the SEBI news broke. And more importantly, after ET Now played an interaction with the Deepam secretary and his comments on IDBI Bank. IDBI Bank actually ended more than 8% higher in the trade. To discuss the market, how it will pan out tomorrow and days to come, we have with us Nilesh Jain, Head Derivatives and Technical Research, Centrum Broking. Nilesh, hi, good evening. What is your sense in markets now? What are the charts telling? Because consistently, we are closing now about 25,000 mark at least. Yes, we did end below 25,100. Do you think this momentum will continue?
Very good afternoon. Good afternoon, everyone. Yes, you have rightly pointed out. Constantly, we are witnessing a good momentum in last few trading sessions. This has been 6 consecutive days of gain. A couple of positive triggers we have for the day. The number one, Nifty managed to end about 25,000 mark for the second consecutive session, and also ended above its 50-day moving average, which is currently placed at 25,010. So overall setup looks positive with a buy and decline approach. Although we have immediate hurdle of 61.8% retracement of the entire fall. If we draw that retracement, then 61.8% comes somewhere around 25,160, and exactly from those levels today we have seen some bit of profit taking, but I don't think that will be a cause of concern going forward. We are likely to see a breakout about the same, and it looks like Nifty is heading towards 25,200 to 25,300 from a short-term perspective. Now, the major pain point was still the Bank Nifty, which has been a laggard, and comparatively compared to the Nifty index, it has been one of the underperformers as well. Overall, the setup, if you look at 56,000 is the immediate hurdle. A breakout above 56,000 will attract a short covering move towards 56,500 to 57,000. But for that, one should wait for confirmation that will come above 56,000. Overall, structure is looking sideways for the Bank Nifty. But yes, the focus should be on the Nifty index.
All right, but having said that, you know, since you were talking about Bank Nifty, I really want to understand what's going to do better, the PSU bank or the private banking. Even though you are gauging a sideways movement as far as Bank Nifty is concerned, but then what's expected to disappoint us, the private banks?
See, Kavita, so overall across all banking names, we are witnessing some bit of selling pressure. But if we compare with the private sector bank, PSU banks are still better placed. Structure-wise, if you see counters like SBI, BOB, Canara Bank, all these major PSU banks have a better structure. So we can expect an outperformance in the PSU bank going forward. And even in the private sector banking space, a lot of counters have witnessed strong build up on the short side. So there could be possibility of a short covering rally in the banking names like HDFC, ICICI, Kotak Bank, and also HDFC Bank, which has been falling in last few trading sessions. So structure-wise, looks slightly on a weaker side as far as IndusInd Bank is concerned. But apart from that, couple of heavyweight counters, as mentioned, are looking a slightly better place, and we can expect a short covering rally going forward.
All right, I also want to understand one sector which has been in news recently ever since GST news has broken out. Now, auto stocks, what should one do? Are there some picks in that sector as well?
Right, so autos have been in a flavor in last few trading session. We have seen a good momentum in the Nifty Auto Index, and overall the undertone is still looking strong, and we can expect further momentum to continue on the upside towards 25,600, 26,000. So within this space, specifically two-wheeler counters like TVS Motor that is hitting a new record high. Structure is looking strong on the chart, and we can expect a follow-up move towards 3,400 to 3,500 with a stop loss below 3,200. TVS Motor is a buy. Apart from that, counters like Bajaj Auto as well, where we have seen some bit of profit taking today, but the major structure looks positive with a buy and decline approach. 9,000 plus kind of levels can be seen in the short run. So the focus should be on two-wheeler space, specifically Bajaj Auto and TVS Motor.
So two-wheeler and auto is your pick. We'll come back to you with more of your picks, especially for tomorrow's trade. But then Dinsha Irani, CEO Helios Mutual Fund, has added Itra and Ola Electric in the portfolio apart from Bajaj Auto. So he's not very keen on adding four-wheeler space. So what he has to say, and is he also betting on two-wheelers? Let's listen in.
Basically, two-wheelers is something that where we believe that a bulk of the hit that EV could have given is done and dusted. From here on, even the incumbent players who've been basically in ICEs, they're picking up their game in the EV space, and that's why you'll see one more new main name being added to the in the two-wheeler space from our side as such. So we'll be probably after a very long time, we'll be holding 4 two-wheeler players in our portfolio per se. 2 of them are pure EV plays, and one is Bajaj Auto as such. So that's what we've been doing, and we're very comfortable. But however, having said that, we're still not getting into PVs. I think PV, there's a lot of overhang left till now. Demand is not that clear anyways, so we'll stay out of that space per se. Even the two-wheelers that we picked up on the ICE guys who are getting into EVs are mainly entry-level two-wheeler plays, and I think they're big beneficiaries of this recent change in GST as and when it happens.
All right, that was Dinsha Irani on his pick on auto sector. But coming back to you, Nilesh, which are the stock-specific picks apart from auto sector you have already given?
Right, so I have 2 by recommendation. First of all, consumption space, specifically newest stocks, we have seen a good momentum. So within that space, Swiggy is one stock that is looking attractive at current level, given the kind of a breakout that we have seen today. Although some bit of profit taking was also seen at the high level, but the major structure has turned positive with a buy crossover on MACD in Swiggy. So it's a buy. Swiggy is a buy for upside target of 450. Stop loss can be placed at 423. Apart from that, another stock which is trading in an upward trajectory, that is AB Capital. Today it has hit a new record high as well. So structure wise looks very strong on the chart. Buy and decline should be the strategy. Looks strong for 302 short-term target with a stop loss below 284. AB Capital can also be added.
All right, Nilesh, thank you so much for taking time out and suggesting your picks for the viewers today. Thank you. On that note, let's take a quick break, and post that we have more on the markets and especially your strategies for tomorrow. Stay tuned.
Welcome back after the break. Let's get started with the big news of the day once again. And group of ministers on GST has approved the scrapping of 12 and 28% slabs and suggested having a 2-slab structure. Additionally, luxury items are set to attract 40% tax and about 40% duty is proposed on all sin goods. All the proposals are submitted to GST Council for approval. We spoke to the top brass of BKG Foods and Blue Star to understand the impact of GST rationalization. Let's listen into that conversation.
All namkeens and all will go into 5%. That's what we think as an industry player. And it will be great for all. We see good rate of volume going up in this category. And simplification of this will also be put up a lot of money in the hand of all rural, because we will pass on the prices. All the industry players will reduce their MRP, good for the industry and good for Indian consumers. So good for the industry, I think.
It is indeed an important and welcome announcement. The entire benefit will be passed on to the consumer, unlike other changes that take place. In this particular case, this is the last item in the invoice. So when we bill the dealers or the dealers bill the consumers, it is going to be at a lower rate, and therefore the consumer will get the entire benefit. It was a year in which the summer season was impacted. Therefore, there is inventory in the system, and we have been hoping that the festival season will spur the demand, and it is going to happen. And I am very glad this has been done at record time. And I think a few more formalities are left. And in the final form, I suppose it is going to be 18% for air conditioning and air conditioning systems.
Group of ministers on insurance submitted a proposal to exempt life and health insurance premiums from GST for individuals. The proposal will be reviewed by the GST Council. Ankur Kharbanda, Executive Director, and CBO Niva Bupa Health Insurance discusses the impact of the move. Listen in.
Proposal of GST exemption on health insurance is a welcome step towards improving, the affordability. And it will also support wider adoption of health insurance in India. Removing GST will immediately lower premiums and will drive a lot of demand, especially for the first-time buyers. It's important to note that the complete exemption would also mean we will lose income, input tax credit on the operational cost. So the benefits to the consumer will be therefore on the account of lower GST, less some loss of inputs credit tax. But it's a great move for our consumers, and especially the government saying insurance for all by 2047. It is in that direction. A lot of people who feel health insurance is not affordable. 18% is sizable. It's almost 1/5 of the total amount. So it will be sizable. A lot of first-time buyers will be there. For the existing consumers who already have, they may also want to upgrade themselves to a better cover, adequate cover, which they were not taking earlier because of premium. And last, I would like to say is that GST exam would also make OPD services more accessible to customers, because OPD-based covers will now become affordable and encourage people to use insurance for everyday.
All right, now let's shift the focus to a news with the whole markets are watching. Indian market regulator is looking for ways to increase the tenure and maturity of equity derivatives contracts, and that was mentioned by SEBI Chief Tuhin Kanta Pandey. SEBI chairman clearly mentioned that the market regulator may consider consultation paper on the same. Let's listen into that bite.
Improving the tenure is really means that to know whether we can sort of have longer term, more longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations.
So and we'll have a consultation paper
yes. Nothing will be on. Qualitatively we have to see, but we have to calibrate it. So if you really look at my statement, where I said in a calibrated manner. So these are not something which are there. This is only in principle with what I'm stating we should be doing.
All right. So after the comments which is coming from SEBI chairman, now let's go across to Sharad to know the key reasons which have spooked the capital markets today after this news came in. Sharad, take it away.
Capital market theme stocks have taken a beating in the day's trade as SEBI chairperson Tuhin Kant Pandey, in a FIC event, he had stated that there's a need to increase the tenure of the equity derivatives contracts. Now, it's expected that there would be a consultation paper which would come in shortly, and that is why it's spooking the markets. Interestingly, he stated that this would be a calibrated approach and the focus would be there to develop the cash markets. Now, the initial crack happening, this is of course the market is spooked, is that there might be doing away from weekly expiries to monthly expiries. Also, there might be more deterrent in the retail participation, which is already down because of the SEBI F&O regulations over the last 4 to 6 odd months, and a knee-jerk reaction is there. Now, the long-term contracts itself may not give enough liquidity and the retail volumes might be impacted more. Now, we also spoke with a lot of industry spokespersons also, and they have stated that SEBI must take investor opinion before taking any such step, and the clarity also should be there on the definition on the long-term contracts. Now, of course, this is just a consultation paper. If it comes, there will be a lot of talking with the industry. There will be representations made from various associations. So that is also an important thing to track for this segment. And the most important is the liquidity and the growth. Will that impact the Indian markets or not? So that's a very important statement coming from the entire community.
Thanks, Sharad, for all those details. Now shifting focus to Deepam Secretary, who made important comments in an interaction with ET Now. In fact, IDBI Bank jumped around 8% in trade after the comments were made on the bank's divestment. In an exclusive chat, he discussed the timeline of government divestment in the IDBI Bank. Let's listen in.
The latest update on IDBI Bank, and can we see the final closure of the divestment process of IDBI Bank in this calendar year?
We have, as I said, we have completed the EOI process. The qualified parties have been through the provisional fit and proper assessment of the RBI as well. We are in an advanced stage of completing the due diligence exercise, and which includes the data room, the details, the legal documents, and hopefully we hope to complete this diligence and data room process by September. So hopefully by the end of the year you will hear good progress.
So end of the year means calendar year or the financial year we will close this divestment?
Wait for it. Time will come. Good announcements will come.
Ravinder has also joined in with the list of stocks which were buzzing in trade today. Ravinder, over to you. Which were the stocks which were there in news?
Various CAMs were in focus in today's trading session, where company has received no objection letter from the RBI for transferring its online payment aggregator activities from the companies to CAMS Payment Service Private Limited, which is a wholly owned subsidiary of the company. Apart from this, Jupiter Wagon is also in the focus, where company has received a letter of intent for supply of 5,376 wheelset for Vande Bharat train, and the cost of the order is approximately 215 crore. Apart from this, on the back of order win, Railtel Corporation of India is in focus, where company has received 2 orders. First is company has received work order from the government of Odisha, and the cost of the order is 15.42 crore. Apart from this, government company has also received a work order from the Kerala State Information Technology, and the cost of the order is approximately 35 crore. Moving to next, on the back of brokerage note, Swiggy were also in the focus in today's trading session, where CLSA has come out with a note, and they have maintained the accumulated rating, and they have hiked target price to rupees 509 as compared to earlier target price rupees 473. And lastly, Hexaware Technologies were also in the focus, where Nuvama has come out with a note, and they have initiated a coverage on Hexaware Technologies with buy rating and target price rupees 950. They say that the current market price offers excellent opportunity to own a high quality business at an inexpensive valuation. So back of this, Hexaware Technologies were also in the focus.
All right, Rabinda, thank you so much for that update. Let's also take a look which are the cues to watch for tomorrow. India Forex reserves data will be out. In terms of global cues, the retail sales of UK will be out tomorrow, CPI numbers of Japan. Apart from that, if you talk about corporate action, there are important AGMs which are planned. Among them are Suven Life, Minda Corp, Ola Electric, Mahanagar Gas, TVS Motor and MRPL. With this, it's time for a wrap in this edition of Your Trades. Thanks for tuning in.